My name is Roz Harmon, and I'm the Sales Tax Processing Division Manager. And if we can move on to the next slide, I will just take a couple moments to give you a very general overview of how sales and use taxes are handled in Illinois. So, Illinois imposes a tax on the sale or use of tangible personal property in the state. The basic state tax rates are 6.25% on general merchandise and 1% on groceries, drugs, or medical appliances. And both of those rates are based on gross receipts from sales. Some items are taxed at higher rates. Food sold for immediate consumption, such as restaurant meals or carryout, is taxed at the 6.25% rate because it's immediate consumption versus the general rate for food, drugs, medical devices. And the other thing that you'll see is that local governments may add on municipal taxes that are combined into a higher rate, which is why you'll see higher rates in some Illinois cities and towns, such as 7.75%, 10.25%, etc. IDOR collects locally imposed taxes and distributes the local taxes back to local units of government. We also allocate the 1% tax charged on food, drugs, and medical devices back to local governments as well. For service persons, if they transfer tangible personal property as part of the service and the sales of that tangible personal property make up 35% or more of the service person's annual income, they meet the de minimis and must register with IDOR to pay service occupation tax. Note that for pharmacy and graphic arts, the de minimis limit is whether the tangible personal property makes up 75% or more of their annual income. If the service person doesn't meet the de minimis, they may pay the service occupation tax to their supplier. But if the supplier is out of state or not registered with IDOR, then the service person must register with IDOR to pay service use tax. Sales and use taxes are reported on the ST1. If the retailer has multiple sites within Illinois, they must also include the ST2 to break out the receipts at the correct rate for each location, which will then allow us to forward the monies collected at each location back to the local unit of government. Retailers may also have to file other forms depending on their location and types of business. For example, they may also need to file the ST14, which is the Chicago Soft Drink Tax Return, the ST4, the Metropolitan Pier and Exposition Authority, MPEA, Food and Beverage Tax Return, which also includes an ST7 for multiple sites within the MPEA district. If they are a service station or a fuel station, they may need to fill out the CMFT1, which is the County Motor Fuel Tax Return for motor fuel sales in DuPage, Kane, McHenry, or Will counties. And for those counties, if there are multiple sites, they would include the CMFT2 for those multiple sites. They may also need to file an MMFT1, Municipal Motor Fuel Tax Return, for other municipalities that impose fuel tax administered by IDOR. Again, in those other municipalities, if there are multiple sites, they would need to include an MMFT2 for the multiple sites. And if they're a automotive service shop, they may need to file an ST8, the tire user fee return for retail sales of new or used tires. Can we move on to the next slide, please? Now, there has been some important legislation that has impacted Illinois sales taxes. As a result of the Wayfair decision, Illinois mandated, effective January 1st of 2021, that retailers located outside of Illinois with 200 transactions or $100,000 worth of sales per year must register with IDOR and file and pay sales and use taxes. If the retailer is located in Illinois and makes online sales, they should also check to make sure that they don't need to register, file, and pay sales taxes in other states besides Illinois. Marketplace facilitators like Amazon, Etsy, eBay, etc., typically collect and remit sales taxes on behalf of the retailers using their platform. So what that means is that if all of a retailer's sales are handled by a marketplace facilitator, they typically do not have to register with IDOR. Let's move on to the next slide. So in terms of other recent legislative impacts, for fiscal year 2023, the Illinois legislature passed bills that suspended the 1% state portion of sales taxes on groceries and also created a sales tax holiday on qualifying school supplies for 2 weeks in August of 2022. For these changes, retailers report the full amount of gross receipts for fiscal year 2023 on the ST1. Then they will use the Schedule GT to calculate and claim credits for suspended grocery taxes and sales tax holiday items. Retailers still need to report the gross receipts for grocery sales so that allocations to local governments are calculated at the correct level for the jurisdiction. And we'll get into that a little bit more detail in the next slide if we can move forward. So now we're going to talk about common errors. And let's talk about amended returns and when and how returns should be amended. One common question that we frequently get is, how do I report merchandise returns since the ST1 does not allow negative figures? And there's two ways to do that. If there are sales in the same retail location for the current period, the receipts for returned merchandise may be subtracted from the current receipts for that retail location. If there are no current period sales for the location where the merchandise was returned, the taxpayer needs to amend the return for the period when the sale originally took place. Returned merchandise is location specific, so that the local government will get the appropriate allocation of money from IDOR for that month or for the amended period. Digging into the grocery tax suspension and the school supply tax holiday, IDOR did analyze figures reported for both general merchandise and food, drugs, and medical devices for July and August of 2023 and found that many retailers who should have been using Schedule GT, just based on their retailer type, did not report their suspended taxes properly. We saw this error play out in a few different ways. One way was that receipts for sales of items where the state tax portion was suspended were not included in gross receipts. The receipts for groceries or qualifying school supplies were not included in the total of line 1 of the ST1 and therefore not reported, or receipts for the groceries and qualifying school supplies were deducted on line 16 of Schedule A on the back of the ST1 and not reported. And then we also saw for that these businesses, no Schedule GT was completed to claim the credit for the gross receipts. Another error that we saw was that receipts for sales of items where the state tax portion was suspended were commingled with receipts for non-suspended items. So for example, for retailers selling groceries and drugs, they included drug receipts on the Schedule GT when the Schedule GT should only include grocery receipts. And then there are some other common errors that we also suspected took place, such as local municipality taxes were not suspended and only 5% of the 6.25 general merchandise rate was suspended, but retailers didn't report any taxes charged on groceries or qualified school supplies. Or, alternatively, retailers continued to charge the full tax rate on suspended items. IDOR has not gotten the volume of amended returns that we expected from the Schedule GT errors that we saw in August and September of 2022. We noticed that by amended return filings between August 2021 and February 22 at exactly the same rate as amendments were filed at exactly the same rate as August 2022 to February 2023, where we would have expected to see an increase in the number of amended filings. So in summary, it's very important that gross receipts for suspended taxes are reported correctly so that IDOR may properly allocate shares of tax revenues to local municipalities. Let's move on to the next slide. And then these are some of the other common errors that we see that are more common and not just with respect to the recent legislation. Another common error is that new business owners register with IDOR in advance of any sales, but they need to begin filing returns even for the first month, even if there were no sales, or even if they were only open for business for part of the month. Another error that we see is that for sales to locations where the business doesn't already have a registered site, the business needs to register that new site before filing the ST1. Taxpayers can register the new site using MyTax. They'll get computation or ST2 errors if the new site is not registered before they complete the ST1. Taxpayers may also call our Central Registration Division prior to filing the ST1 on the 20th day of the next month in order to add the site. Another common question from taxpayers that we get is that they just filed and paid the total amount due showing on their ST1, but MyTax is still showing an amount due. The reason usually is that the taxpayer has filed the return and taken the 1.75% retailer's discount, but MyTax still shows the retailer's discount as a balance due until the return and payment are fully processed and posted, which is usually around 5 to 7 business days. And now we can move on to the next slide. I believe that the presentation has been or will be shared with the participants today. And on this slide, there's a number of very useful links to access about sales tax information. And hopefully this will help you sort through both what your business needs and what the state of Illinois needs in order for that business to successfully file and pay sales taxes.